Bit of a mixed picture for the companies reporting, though. We got some decliners, we got some winners, and we've got Shawn Cruz here with us in studio. Head trading strategist, TD Ameritrade. Morning, Cruiser. What do you think? We got a big rally on our hands here?
I mean, I think one thing that is happening just by and large as we get more and more into this earnings cycle is things maybe aren't as bad as some of the worst case scenarios out there. And maybe we're somewhat pricing in. I mean, there's never just one thing the market by and large is pricing in. There's usually a range. And I think there was a sizable amount of analysts and investors out there who are really expecting just some massive earnings misses, some decidedly downbeat outlooks for the remainder of the year. We're getting some guidance that's getting lowered or just saying they expect to come in at the bottom end of previous range, but we're not just seeing just massive chopping down of expectations from a lot of these companies, at least where they're sitting at right now. So I think that's why you're seeing a little bit of some confidence come in the market. You're seeing the volatility, the VIX index pull back to those mid-20 levels. I think that to me is the biggest tell that maybe the market was a little bit worried that there was the potential for a massive resetting of expectations. And as we're getting through a lot of these big companies that can give us a little bit of a good read through on the industries overall, especially when you get IBM out there for tech, Johnson & Johnson out there for healthcare. We've gotten through a lot of the banks, seen some retailers. I think they're saying, look, if there was something macro going on here that was just going to come in and wipe out expectations through the end of the year, we probably would have seen it show up, at least in some of these companies, in a meaningful way. They are coming in and maybe giving you a little bit of, I'd say, a cautious outlook, but it's not, like I said, just a massive chopping down or halving or expectations coming in 25% or anything. You're not seeing that out there.
Okay. And for IBM, the guidance, I guess, left some to be desired here. Stock's down 6%, even though the top and bottom line beat being punished. Was a winner coming into this, up on the year. Very rare in the sector, obviously. So what's the problem here?
Well, one is, if you think about where they were trading going into this report, they were trading towards the higher end of the range they've traded in over the past year. I mean, 144 was the high that they'd made, the 52-week high that they had made in the start of June. They pulled back, they rallied back a little bit higher up towards those levels once again at the end of June, but they were trading right around that 140 level. So I think this was one of those reports where, is it good enough that people are going to come in and push it to new highs and push it up above 145, maybe make a run for 150? The market was expecting the range to be as high as 147 on the upside potentially, or down around this 132, 133 level. So I think there just wasn't enough here to push it higher or keep it elevated. There's a little bit of uncertainty out there, and I think a lot of it is when you hear a lot about these companies having to go in and take a look at their hiring, and their staffing. When you are in a sector that is expected to have some incredible growth, especially if you're in the cloud space, IBM's in the hybrid cloud, which is seen as a great opportunity to get some of these businesses coming in. But when you're seeing across the board in the tech space, people coming out and either cutting down plans to increase headcount or just outright doing layoffs, you don't do that when you expect strong, robust growth.
Sure.
Or you need to staff up because you're not going to be able to handle all the business coming your way. So I think this is a little bit of a cloudy outlook due to some of the dollar currency translation effects. But I think it's more or less a little bit of a cloud being cast over the tech space in general because of a lot of what we're hearing. We continue to hear about staffing.
If the biggest problem IBM can have is the dollar eating away at their cash flow more than expected, a kind of broad macro impulse that they have no control over, that would be some good progress for IBM. So I'm kind of, to see the market punish it the way it is, I guess any negative surprise when it comes to this company's specifically cash flow and potential for margin support and bottom line profitability. That's why people buy IBM in a market where they're selling growth stocks. They're not buying IBM because of its top line growth potential of, mid-single digits. They're buying it because at least they know IBM takes the dividend seriously, the bottom line payout. And so anything that could potentially threaten that, even if it is a macro force, I guess it makes sense to sell it a little bit. But, as far as IBM standards, this is not a bad problem to have. It's been a while since that's the worst thing you could find about an IBM report is a little currency headwind.
Yeah, and that's why this one was, I thought maybe you could, just because it wasn't a knock it out of the park guide, great guide moving forward type of a number, maybe that means you could see it sell off a little bit. I was actually surprised to see it sell off as much as it did. Yeah. If you're a longer term investor.
It's getting pounded, 6%.
And I think if you look at what the dollar is doing, the dollar is already starting to pull back off some of those highs that we had recently seen it at. So if you're a long-term investor, maybe you can look past that and say, look, I don't think the dollar is going to be at 108, 106 forever. I do see that dollar moderating. That can help you look past some of these temporary effects that you're getting from the dollar. So I think, if maybe there's a little bit of a concern, because they did say they're looking at some sort of the potential for a mild recession. But I think if you're looking at a business that is reliant on, because their infrastructure growth is a big part of just companies going out there, getting IBM to come in, spruce up our infrastructure, our computers, our networks, everything.
Yep.
Come in, fix that up. If you're expecting that to remain robust, that's hard to imagine if you're also saying you expect a small or mild recession. Businesses don't go out there and start making these massive cash outlays and investing in upgrading their entire digital infrastructure when they're expecting a recession and the outlook's uncertain. That's probably one of the first things they're at least going to pull back on somewhat. And if you're looking at trying to make some headway in some of those mid-sized businesses, which I think IBM is trying to do, and get some good volume coming in the door via that sort of sub-segment of the businesses that are out there, it's hard to imagine those medium-sized businesses who maybe don't have the cash flow, the strength of the balance sheet to go out there and continue to invest in their digital infrastructure if there is in fact a mild recession. So I think that's also overhanging the stock a little bit here.
All right, nice, well said. It does fit into some of the other news flow that we've gotten from these cloud companies dialing back expectations, analysts reporting about sales slowdown in the data infrastructure business, and also just what we saw for the last two earnings from companies tied into, cloud and everything. Because IBM still, even though they've been more sluggish, is subject to those same macro whims, of course. They supply into the same data centers. And a lot of the reports have been about slowing spending, and earnings have shown that. These companies peaked out in the revenue growth last year, and we've seen that now for multiple quarters. Seems like the question for this coming quarter, and the reason why I think it's important to spend a little time with IBM, is because the cloud stocks have done really, really poorly. Even as the market's firmed up here the last month, we're like right on the lows for most of the major cloud companies. And even within the last week, we've had some pretty major blowups. Like we saw some of the big drops in the space, even within the last 10 days or so. So there's still a lot of nervousness, it seems, about enterprise spending, and a really important part of the tech sector. By the way, tech's the worst performing group today so far. It's energy, materials, and banks that are higher. Industrials as well. So tech's actually a little bit soft this morning. What do you see in Lockheed? I'm curious about this one, Cruiser, because a lot of people think about the defense names as being defensive as well, where they have these specific earnings and revenue streams that are outside of kind of the major macro and economic themes. But the stock's been pulling back pretty hard for the last 4 months. Is that because it got like a bid from the Russia-Ukraine invasion? Maybe U.S. was going to get involved or something? Or what happened here?
Yeah, one thing is the supply chain challenges are really starting to bite into a lot of these bigger industrial companies that are seen as having very strong, well-established, internal expertise in managing their supply chains, especially for something like Lockheed Martin that almost benefits from being considered, something that is important to the government and national defense type of a company. So they're probably going to get, a little bit of a jump to the head of the line just in terms of pecking order for what is available out there in terms of a lot of the advanced components that they need. But they're even talking about the supply chain is expected to weigh on their ability to go out there and generate the products they need to sell. And they had to lower their guidance a little bit here too, which I think is also not going to be very welcome by the market if you think about it.
Okay, so they're not doing a whole lot. I mean, Lockheed down, but the rest of the group, Boeing's got its own thing going on, even though it still is in that defense category. Boeing's making some more headlines, selling some planes. Aviation Capital's buying 737s. So that's actually starting to pick up again. But Lockheed cutting the guidance, not going to be rewarded. Simple enough. Stock's down 2%. Makes sense to me.
And I mean, if you look at where Lockheed Martin's trading right now, I think this is actually a really important level right around 380 for it to hold.
Okay.
I mean, it's been resistance, it's been support. I mean, this looks like a pretty key inflection point for the stock just from a price level.
Yeah, you can see it there.
To trade around. So I think right now it's pulled back. I mean, it was up as high as 480 earlier on in the year. I'm a little bit surprised to see the news that they just had an order for 30 F-35s come in the door. Not seeing that maybe drive a little bit of optimism around.
How many of those are for the next Top Gun?
Or F-35, I should say. I'm sorry. Yeah, I know. It's. I think. Well, you don't need Tom Cruise doesn't need an advanced fighter.
Doesn't he?
Got like a rusty F-14
right.
out of a hangar.
Apparently, he did enough damage with that. Spoiler alert!
Oh, yeah.
Okay. All right. Let's talk a different type of toys. For some, those might be. But Hasbro shares a little changed. This is kind of a weird dynamic where the shares of Hasbro have been in this deep, entrenched bear market all year. Stock's getting killed. Mattel, on the other hand, is actually up on the year. And they're like polar opposites here. So Hasbro, preceding Mattel's earnings. We got Mattel in a couple days. Anything interesting here?
I mean, one, their entertainment business was a little bit of a drag. They actually spun off. I didn't even know they had a music business. But they had a music business that they actually spun off. So their entertainment business was down about 18% from a revenue standpoint. If you exclude the revenue, the music business they're getting rid of, it's only down 4%. So when you start to see them focusing in on their entertainment, their gaming business, which actually was a point of strength, I think as an investor you'd like to see that. But once again, if you look at the stock, and I think this is going to be something to look at when you're gauging reactions this earnings. And I don't know if there's a better example to look at here than, say, IBM versus Hasbro. IBM trading up at the top of its 52-week range. It didn't come out with stellar results. I wouldn't say they were disastrous either, but enough concern in there that you're seeing that stock sell off. Hasbro is actually trading well below where it was trading last year. It's actually been hitting the bottom of its 52-week range here around 78, 79 bucks a share. So I think it's interesting that all they had to do is not come out with a disaster to force another leg lower and break down to maybe some levels they hadn't seen. But they're able to swing to a profit. The gaming unit, there's actually a Wordle the party game. I didn't know that.
Huh?
Wordle the party game.
Oh wow! I didn't know that either. People are going to go bananas for that.
I must be going to the wrong parties. I've never seen one bust out a Wordle party game. But I mean, they also have Magic the Gathering, which is a very popular.
Okay, that's cool.
It's got a huge following. So they're finding ways to focus in on some of these businesses that are growing and are driving them to profitability. And if nothing else, that's at least going to allow the stock to maintain some of the levels it's trading at.
Did you get on the Wordle train?
No.
Yeah, me neither. People are obsessed with that stuff.
I play chess on my phone.
Okay.
That's my thing.
That works. Hey, last one, Cruiser. Let's talk some JNJ here real quick, because the biopharmas and the healthcare space has been pretty good. And JNJ doesn't really trade like a vaccine stock anymore. It doesn't look like Moderna. It looks like JNJ. and it looks like a staple, and it's up on the year. Do the earnings justify that?
Yeah, I mean, if one is, if you look at the effects here, once again, constant currency, I think it was actually doing fairly well. And I think investors are looking past the, hey, if outside of the impacts from the strong dollar, didn't really see anything else there overly concerning. And the stock, once again, look at where it's at in its range. It broke out above 172 earlier on, around February. So it's well off of its highs already. And that's going to allow some of these companies now, I think you're seeing a trend emerge here to at least tread a little bit of water and maybe not have as much of an adverse reaction to a little bit of a cautious outlook.
Okay. All right, J&J. A little changed. Nice chart over the last year. I mean, compared to the rest of the market. All right, thanks, Cruiser. Nice work. Appreciate it. Thanks for the earnings walkthrough. Shawn Cruz, head trading strategist at TD Ameritrade.